Getting a financial education is your responsibility. The government has already decided they're not going to teach you personal finance. They don't want you to be free of the system. They need you to work until age 65 with no options and depending on Social Security. So it's up to you to teach yourself and your children about personal finance. Nobody else is going to do it. Because the way the system is you won't get it at school or at home or from church or anywhere else. And you will probably, and some people, unfortunately, will never get it because they don't have the intestinal fortitude. They don't have the desire. Some people are just so beaten down by the system that they can't even look and see that tomorrow is going to be a brighter day. They can't even look and see that there is an opportunity. They can't even look and see there is potential out there. If only I make some changes, right? That's the definition of insanity, is doing the same thing day after day and expecting different results. Every Friday, TGIF. Sunday, you get that burning in your stomach, knowing that tomorrow is Monday and I got to go back. If you want to break out of that, do yourself a favor by getting yourself financially educated. But you're doing that by watching the MD Investor. If you are enjoying the content, if you're learning, give me a thumbs up, a like, a subscription, and send the video to a friend. Appreciate that. So, yeah, it is our responsibility. And acknowledging that, one, it is very important. We need it. We are not getting it. And the only way we're going to get it is if we take the initiative is the first thing, right? You're doing the right thing right now by watching the MD Investor, somebody who's passionate about personal finance, who knows the importance. I've been, I've seen where the lack of personal finance knowledge can take you. And I've seen also where getting the knowledge and taking action, how it can move you and give you freedom and option. So congratulations to you. Yeah, so this is something that has to be done. And the system is not changed. Our children are not getting it. I'm telling you, your children will grow up in the same system. Go to school, study hard, get a good job. There'll be nothing about personal finance. And that's what can give you freedom from the system. Okay? So, what would our personal finance education entail? It would entail learning the difference between assets and liability. That is a huge topic. Learning the difference between assets and liability. An asset is something that put money in your pocket on a month-to-month basis. And a liability is something that takes money out of your pocket. So there's owning one share of McDonald's stocks. That's an asset, right? They pay a dividend every quarter. And if it goes up, if the price goes up and you sell, then you've made a gain, what they call capital gain. If you've held a stock for more than a year, it's considered long-term capital gain. It's taxed at a lower rate. I have some videos on taxes on the channel. You can check that out. If you've held it for less than a year, it's considered short-term capital gain, and you'll be taxed at your regular income. It's a little higher. So these are the things that we need to know. Other assets, ETF, exchange traded fund, a basket of stocks that you can buy and sell like stock, right? So these are the things that we need to know. You need to know what an index fund is. Again, it tracks. Again, what's an index fund? It tracks an index. The S&P 500 is an index, a basket of the 500 biggest companies in America, right? Annualized rate of return of about 10% per year. Not 10% every year, but over time, it's annualized to be 10%. We need to know that. The rule of 72. How long will it take for your money to double? You take 72 and divide it by the rate of return. If the rate of return is 9% per year, 72 divided by 9 is 8. Every 8 years on average, your money would double, assuming you're not adding more to it, right? So these are things we need to know. We need to know that credit cards are a dangerous thing if not used correctly, because the interest rates are exorbitantly high if you're not paying it off at the end of every month. If you're carrying a balance, 20, 25, 30%, you can't live like that. Because if your investment is giving you 10% and you're paying 30% of your credit card, you're still losing 20%. So we need to learn the risk of having credit card. You can use it well if you pay it off every month. Don't carry a balance and pay it off, and you could benefit from the points, right? Free hotels, airline, mileage, and so on, right? So we need to learn about debt, bad debts like credit card, and using leverage in a smart way. Okay, we're using borrow money at a low rate and take it and invest it in something and get a higher return. Of what they call interest arbitrage. The difference between the two is what you'll make. So you're using other people's money to make money, right? We need to learn these. We need to learn these. Okay, that's how we get to win. We need to learn about taking on too much student loan debt. We need to learn that we need to get a marketable degree. We need to learn about the different retirement accounts, traditional IRA and Roth IRA. We need to learn the difference. Traditional is pre-tax dollars are used, and it grows tax deferred until it's time to take it out. I think the age now is about 72. And then after that, the government forces you to take it out with what they call RMD, required minimum distributions. And that's going to be based on the amount of money you have and how long they expect you to live. There's an actuary chart they use based on your age and how long they expect you to live, and they do some math and they'll say, okay, you have to take out 6% per year or whatever. We need to learn about Roth IRA, right? Where you don't get a tax deduction for your contribution, but the money grows tax free, and there's no required minimum distribution. It'll grow and grow and grow, and you're not required to take it out. So we need to know about all this stuff. Saving for college for our kids, the different type of vehicles that are available, such as the 529. We need to know about investing for our children, such as in a custodial brokerage account where they can buy assets. We need to learn that money that you want to grow long term should not be in a savings account because the interest is very low, but should be in a brokerage account. We need to learn these things, and nobody's going to spoon feed it to you. You have to take initiative, write books like The Simple Path to Wealth by J.L. Collins, books like Rich Dad Poor Dad, books like The Richest Man in Babylon, like lots of books out there and podcasts and YouTube channel. MD Investor, you're watching one. Again, if you enjoy the content, if you're learning, smash the subscription button. If you're learning, hit the like button. Just hit it lightly. You don't have to smash it. And give me a thumbs up and give me a subscription and send the video to a friend. So like I said, guys, just a taste. We have to learn about the different asset classes out there. There's bonds out there, right? Where you can buy a bond, which is like an IOU, right? And you're basically lending money, whether it's to the government, okay, like in a treasury bond, or you still lend money to a company, which is a corporate bond, or to a municipality, what they call a municipal bond. There's certain advantages. If you lend money to if you get a municipal bond, it goes tax free. So there's a lot of things out there, guys, a lot of different asset classes, real estate, and a lot of information out there that if you do not avail yourself to it, you're going to be at a disadvantage, and your children will be at a disadvantage, right? And they will be on the government plan. So the question you want to ask yourself is, what plan do you want to be on? The government plan is very clear. You work until you're 65, maybe even 70. Now they're saying, the money in Social Security is running out. Maybe you may have to work till 70. Maybe they'll change it to 72, 74, 75. So that's the government's plan for you. The question is, if that's okay with you, then I guess you could turn it off and you can do what the government wants you to do. But if you have your own plan and you want freedom and you want option and you want choices and you want liberty to live the life that you want to live, then you have to take your personal financial education serious. Okay? You have to listen to the podcast. You have to read the books. You have to dialogue with like-minded people, and you have to do the best practices. You have to take actions and teach your children. Okay? So they'll have more options than we did. Again, guys, a quick video from the MD Investor just to educate ourselves so we can have options and teach our children and break the cycle of generational poverty. I'd appreciate a subscription on YouTube. Until the next video, MD Investor out.